On YouTube, welcome back to another video with the House Money Investing channel. In today's video, we're going to look at some Ethereum movements that I've had, as well as I got some stock picks for you guys, some dividends paid out to me, and we're going to go over 4 stocks that I just sold out of. Excuse me. If you like this type of content, hit that like button for me. I'd really appreciate it. Subscribe, hit that bell if you would like to follow my journey and receive content similar to this on a daily basis. I do have 12 different brokerages that I show on this House Money Investing channel with 100% transparency, as well as, analyzing stocks 7 days a week. So I'm constantly giving you guys great stocks to look at and to possibly get into, to make some money on, make some good passive income. As well as I show a lot of stock news, price movements, my personal daily gains, and I also do various cryptocurrencies as well, as far as like Bitcoin, Ethereum, Bitcoin Cash, Ethereum Classic, Dogecoin, just to name a few. So let's jump right into it. Oh yeah, before I forget, there's a link in the description below. If you sign up for Webull, you can get free stock, 4 free stocks valued up to $3,700. You can get a free stock from moomoo or moomoo. You can get a free stock from Robinhood, and you get a free $30 from M1 Finance. So, go ahead and take advantage of that. It's basically free money. Those shares you can hold long term, or you can liquidate them right away. Any deposits that you make into the account, you can also pull that right out if you would like, just to make a quick buck, or, if you're more into the investing style, which you should be if you're at this channel, then just hold them in there for a long term. Unless it gives you like a junk stock, then yeah, I would go ahead and liquidate it and use that money to purchase a fractional share of something that is a good buy. So jumping right into it, I got 2 stocks to buy before their earnings call, and they're going to be Netflix and Apple. So Netflix is something that I personally hold long term. I'm currently down 2.65% in Netflix, but that's okay, because it's gonna bounce back. I got in around $510, and that was probably back a couple months ago. It's been consolidating a little bit over the past 3 months. It's been down about 6%, but Netflix is on the it grows about 70% a year, so definitely, they're going to put up some nice earnings due to the pandemic. A lot of people watch Netflix and things and stream off of Netflix. I personally, use Netflix myself as well, so definitely not worried about it being down, 2 or 3%. As like I said, it gains on average about 70% a year. It had a nice year last year. It was up about 40-50%. It doesn't pay a dividend, but that's okay because it's a great growth play. It has 42 analyst ratings on it. Over 60% are in the buy zone. And international expansions offer attractive markets for added subscribers for Netflix. Netflix's internal recommendation software and large subscriber base give the company an edge when deciding which content to acquire in future years. Netflix has built a substantial content library that will benefit the firm over the long term. Netflix's EPS haven't been as great as everybody would think back in 2020, but we're expecting the fourth quarter and the first quarter of 2021 to be outstanding. And this will give you exposure to the software market sector of the of the market. And Netflix is basically a streaming entertainment service company which provides subscription service streaming for movies and television episodes over the internet and sending DVDs by mail. It operates through a few segments like the domestic streaming, international streaming, domestic DVD, and the domestic streaming segment derives revenue from monthly memberships for service consisting of solely of streaming content to its members in the United States. So a great streaming platform. I'm pretty sure everybody knows about Netflix, and I'm pretty sure anybody with common sense can see that this company is going to make money. but you want to get in before those earnings, because those earnings are going to do very well. Same with Apple. I mean, Apple is a long-term hold for me as well. Both those companies are. Apple, I'm currently up 4.85%, and Apple grows usually about 80% a year. It grew about 60% last year, and Apple has done great. They do pay a small dividend of 0.64%. PE ratio is pretty fair on this company as well. You got 40 analysts giving it a 70% buy rating. And, between greater smartphone penetration in emerging markets and repeat sales to current customers, Apple has plenty of opportunity to reap the rewards of its iPhone businesses. Apple's iPhone and iOS operating systems have consistently been rating at the head of the pack in terms of customer loyalty, engagement, and security, which bodes well for long-term customer retention. We all think Apple is, still innovating with introductions of like Apple Pay, Apple Watch, Apple TV, and AirPods. Each of these could drive incremental revenue, but more crucially, help to retain iPhone users over time. And Apple is just like a family, or kind of like I can't think of the right word, but basically their network of products. Once you get sucked into Apple, you're gonna have an Apple phone, Apple Watch, Apple AirPods, MacBook Pro, and there's a lot of people loyal to this brand, and Apple's the brand to have socially. So definitely great for them. Their EPS has been falling all of last year from quarter 1 to 4. But quarter 1 of 2021 should be very great. That's when you want to get in before they come out, so you can ride. I typically wouldn't ride a stock through earnings, but I mean, you can't go wrong with Apple. Whether you ride it through or not, holding it long term is the best play. And Apple's just dominating that space. And this is basically like a hardware, software sector of the market. And Apple engages in the design, manufacture, and sale of smartphones, personal computers, tablets, wearables, and accessories, and other variety of related services. And they sell products in, of course, America, Europe, China, Japan, Asia. I mean, pretty much everywhere Apple products are located. So these are two companies you want to look into to, do your own due diligence, but just look into them and think about getting in them before the earnings call if you hadn't already gotten into them. Then we got to play into renewable energy, which is PSX, Phillips 66. Phillips 66 has been on a down spiral. It's been recovering over the last 3 months. It's up 45%. This is going to be a nice bounce back play for 2021. Renewable energies, finance are just a couple of sectors I'm naming at the moment that will have a nice 2021. Phillips 66 does pay a nice dividend of 5.02%. You got 20 analyst ratings, all at 100% buy, so very bullish there. And Phillips 66 is expanding its midstream and chemical segments so that refining will eventually represent just 30% of its total earnings. This could result in multiple expansions and a higher valuation. With one of the highest distill yields among its peers, Phillips 66 is well positioned for the long term, where the growth outlook for the distill is more favorable than gasoline. Phillips 66 stands to benefit from a recovery in crude oil prices, which could benefit the NGL fractional operations in its midstream business. EPS, has been pretty good since, the start of 2020. I'm expecting the fourth quarter and the first quarter to be as good as well. And basically, they engage in the processing, transportation, storage, and marketing of fuels and other related products. So definitely a nice play into renewable energy. And like I mentioned earlier, with the price of crude oil going back up, they're going to benefit from that tremendously. Okay, the next pick I got for you guys is ALB. This is something I hold long term as well. Great growth play. I'm up currently in my position 56.58%. So this stock has done very well for myself. On average, it usually grows about 50% a year. So me being up 56%, is very, very good, considering. Really, no matter what they grow, up 56% is pretty outstanding. They do pay a small dividend of 0.85%. And looking at 24 analysts, you got a 29% buy, 38% hold, 33% sell. So kind of bullish and bearish from different analysts depending on who you talk to. When that happens, I typically want to look into the analysts and look at their track records and see who has a good track record. If that's something I want to use that as a personal catalyst to selecting a stock. This company has tremendous upside to electric vehicle growth through lithium batteries. Its Taliesin joint venture is one of the few large operations that can significantly ramp up production over the next few years to meet incremental demand. They have a top tier lithium assets through its Bren operations in Chile and hard rock operations in West Australia, which are among the lowest cost sources of lithium productation globally. They also have low cost brenham production through its highly conservative brims in the Dead Sea and Arkansas. So that's great there. Low cost product, capable of pushing out massive amounts for these lithium batteries. Everybody knows EV is the new wave. It's eventually going to take over completely, and it's going to ramp up here in 2021 and in the coming years. So definitely, this is a bullish thing for this company, ALB. Their earnings have also been great, and this will basically give you exposure to the material sectors of the market. And this is a specialty company which engages in developing, manufacturing, and marketing of chemicals for consumer electronics, petroleum refining, utilities, packaging, construction, transportation, pharmaceuticals, crop production, food safety, and customer chemistry services. So definitely a wide variety of things they do here. So the crop production is going to be a massive market in 2021. Of course, pharmaceuticals, transportation, lithium batteries, petroleum. They just give you a wide variety of exposure to some great sectors and some key things that's going to pop in 2021. And like I said, I'm already up over 56%. So I'm just going to add to my position on this play here. Next I have for you guys is PPLT. This is a physical platinum ETF. It usually grows about 5% a year. It kind of trades sideways for the most part, but it does grow a little bit. It doesn't pay a dividend, but this is to give you exposure to the precious metal sectors of the market. Like, you always want to try to be in gold, silver, copper, platinum, etc. It's just kind of a fiat. It's just kind of a hedge against the fiat currency, because the more money they print, the more valuable these precious metals are going to be. And basically, PPLT tracks the platinum spot price, less trust expenses using platinum bullion held in London and Zurich. So this is basically just going to track the price of platinum. As it increases and decreases, it's just going to ride along with it. Next here, I got Grubhub. This is something I also hold long term. This is a nice play as well. I'm currently down on my position, 11.56%. Probably due to the pandemic or whatever. But on average, Grubhub's been growing about 40% a year, so I'm not really too worried about it. I know I'll recover and bounce back in the play that I'm in. I don't know, 16 analyst ratings, 94% recommend you to hold. Grubhub's more aggressive in spending in the short term. Could you could yield brand loyalty in the long term. Grubhub should maintain its early mover advantage, as this has helped the firm partner with more restaurants across the U.S. than its competitors, attracting more diners, processing more online takeout orders, and accelerating top-line growth. The scalability of Grubhub's platform could lessen the firm's annual capital expenditure and allow it to lower its take risk and compete more effective with newer companies in the market. They had they've been doing good on EPS. Quarter 3 of 2020 was outstanding, and this is going to give you exposure to the not only the restaurant sector of the market, but also customer services and retail. Grubhub operates as an online and mobile food ordering company, which connects diners with local takeout restaurants. Its online and mobile ordering platforms allows diners and corporate businesses to order directly from takeout restaurants in the United States and in London. I'm thinking everybody pretty much knows what Grubhub is. Grubhub's sort of like Uber Eats and things of that nature, where you just basically can order food on an app and have it delivered to you. So definitely a nice play. Something that's going to keep growing. Then here we got MJJ. This is going to give you exposure to the cannabis market, and this is micro sectors cannabis. Fairly new fund here. Started back, early 2020. Last year was its first year. It did grow 63%, which is very great. The cannabis sector is going to steady rise higher and higher as the legalization of cannabis is coming more widespread. It was already decriminalized federally, so definitely something I'm very bullish on. And this basically tracks a market cap selected and weighted index of North American cannabis equities. The reason why I like funds and ETFs are because they give you a wide variety of exposure and diversification, and they're going to be something that's going to be lower in volatility and something that's not going to fluctuate so much. So this fund is going to have the top weighted companies from America dealing with cannabis in it, and as these companies grow, this fund is going to grow as well. Now the next one here is MJO. This is a double leverage cannabis fund here, and this one's a fairly new one as well. Started around the same time as the last one. This one ran up 129% because it's a double leverage, basically the same fund that I just went over. So it's going to do twice as well or twice as bad as the other fund. And with me being very bullish on the cannabis sector, I will be getting into the double leverage as I can gain 2 times the profit. Next year we got some dividends paid out in the Cash App account. We got Brookfield Renewable Corporation got 6 cents, and Realty Income got 2 cents. These are very small dividend payouts. I do own 1,296 stocks over my 12 portfolios, so some of them are fractional positions, which are very small payouts on the dividends. But these smaller dividends do add up. My biggest dividend I've ever received on this house money account is $5.40, but I was still able to make about just around $400 last year off of dividends. So all the pennies add up, and then when you put it on the drip future, they're going to drip back into the positions, and that interest is going to compound. And then with me adding to these positions every 1 to 3 months and building my position, I'm going to gain more dividends, and that drip is just going to compound even more. So definitely it's good to get some dividends. I'm not particularly a dividend investor. I do buy dividend companies if a company is got good fundamentals, great balance sheet, it's something I believe in. They got good board members, good analyst ratings and earnings and stuff of that nature. I don't care if it's a dividend company or not, I'm going to invest in it. Next year we got Ethereum. I got about 0.29% of a coin. My average cost of Ethereum is $355.05. Ethereum hit about $1,400 today. So this here was an initial investment of $103. My $103 is now worth $389.75. This is in the Robinhood account, by the way, and this is 6.63% of my portfolio. As you can see today, it was up $2.06, up 50.53%. My total return is $286.71, up a whopping 278.25%. This is something I usually add about $9 to $18 to, like every 3 months or so. And I'm just gonna keep adding to it. I'll probably buy some more. Well, I definitely will buy some more at the end of this month. It's gonna be around that $18 range or so, maybe $22 or so. And just steady dollar cost average build to my position. I just need exposure to the crypto sector, and I buy Ethereum on eToro, Robinhood, PayPal, and Webull. So definitely, and Coinbase and crypto.com. So definitely just keep building my positions, lower my risk and things of that such. I don't want to just go all in, but I do want to have exposure to it. I personally believe Ethereum will eventually get to $10,000 per coin. Now it's at 1,400, so I can still 9 to 10x my position. Next, I just made a post about Ethereum. Put a hashtag who's watching the money though. Hashtag I caught it. Hashtag oh yeah I did. Hashtag I think I caught it. Hashtag oh yeah I think I did. When the crypto took a dip, I called it a shakeout and basically a bear trap, and I was pretty much right about that. As you see, it did bounce back. Bitcoin's back up to like $35,000. Next, we'll have the 4 stocks that I sold out of. I sold B&G Foods out of my public account. This was only an $8 investment, so I did lose 49 cents on this trade. Then I sold Plug Power for $11. This was a $11 investment. I actually made a $9 profit off this trade, which I just sold, pulled out my principal. So I left my $9 profit into the stock in the public account. Then I sold Pan America Silver. This was, I believe, $13 investment, so I lost like $1.42. Silver had a bad month, so when I first got into it, it ran up and then it just dipped, so I did lose it, $1 and some change, but it's okay because I'm already got plenty of exposure to precious metal, and it's something I'm gonna steady try to swing trade and build my position in. It just wasn't that, it was just bad timing basically, or bad luck, I guess you can say. But losing $1.42 on this one and $1.49 on the other one, and then winning $9 worth of fractional share was a good, good day for me basically. And the last one I sold out of Bridge for $10. This one I only made about $1 profit. Just left that $1 profit into the public account, pull out my principal. So overall, I made about $8 today, worth of free stock. At the same time, I got out my principal out, so I didn't spend any money, didn't lose any money. I actually gained $8. So like I said, I have 1,300 stocks. So if you divide that by 4, that's like 300 some odd. So we'll say 300 times, $8. I can still make, $2,400, even if this was my average benefit per day or profit per day. So, I don't mind. Sometimes I'll gain, $100 on a play. Sometimes I'll lose $30 on a play. Just all depends. But I do have almost 1,300 stocks, and I'm well diversified, which does lower my risk. So, at the end of the day, on all 12 of my brokerages, I'm up. I've been up the whole time. So definitely something I'm not worried about. If you like this video, please hit that like button for me. Subscribe, hit that bell, follow my journey. Tomorrow I'll be selling 5 stocks. I'll be posting any daily gains I have tomorrow and things of that nature, stock news, price movements. I appreciate you guys for tuning in. I'll catch you in the next one.